The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everybody. This is the Tiger Technicians Hour, the 3-day-a-week Tiger Technicians Hour, about to go to 5 days a week, 11 o'clock till noon. As an advocate for the ChapmanWave, it's imperative that I spend as much time educating, teaching, going through it, building up the audience that appreciates the veracity and strength of the ChapmanWave, the umbrella name of the techniques, the myriad techniques that go with the ChapmanWave. How you go from most important low bar to at least 4 peaks high, how you notate it, etc. And the proof of the pudding is in the charts that we look at. So with that, and I have to say I'll miss Kate Stelter. Really enjoyed her perception of low cap stocks, the differentiation between low caps, low priced, IPOs, stocks that had been big winners that went to low price, might have had big caps, but they were low price, so there was a differentiation. And wish her the best of luck in her new endeavors, and we certainly will miss her here. So I'll be on Monday through Friday, 11 o'clock till noon with the same number, 877-927-6648 to call. As you heard with Steve early this morning at 9, kicking us off here at TFNN. Full day of programming. 9 o'clock in the morning, Eastern Time, until 6 o'clock in the evening. And today, straight after then, of course, after Steve comes Tom O'Brien and Steve together. And don't forget, tomorrow is this fantastic, I wish I could come down to it, in Tampa, a fantastic workshop with Daryl Martin. Diagnostic hour he has here coming up after Nico Dahan, the health program on Fridays at noon till 1. And that's going to be, Tom's going to give a free 4-hour demonstration of all these terrific techniques based on his trading methodologies, etc. live tomorrow. It should be really, I think it'll be terrific. And it's free. I mean, what more could you say? To get that kind of information and free with Daryl and Tom together. So I wish, I wish I could be there. And if you're able to go, check out the front page of TFNN. Now let's get to the nitty gritties. This means that I'm going to be able to. Just my wonderful engineer, Al, just sent me a note. Nico's show, Living a Primal Lifestyle, has a special guest host today, Paige Clark. Whoa, that's always interesting when Paige comes on. So that should be very, very interesting. So my service is the opening call. It's a daily service, comes out every morning. I start sending charts out. Well, I start working at about 6 in the morning. You can usually find me at the office about 11 o'clock at night. I just spent a lot of time in this. I've spent, it's my adult life, besides being a professional musician for at least 20 years. I had a dual career, and now, of course, I still do teaching, some teaching. I'm still involved in music in a number of different ways. But this is, of course, what I've been doing full time for a long time. And I just love it. I mean, this is people keep saying, well, why don't you retire? Well, I don't know. What would I do if I retired? I'd do the same thing. I'd be staring at the monitors. I'm actually capable of going away quite freely from the monitors. I always check, no matter where I am in the world, if I can, I'll check on what the market's doing, certainly what the Dow is doing. It's more to demonstrate my internal techniques, to test them. I love testing all the time. That's why even when I'm not trading, I'll have the currency futures, because they're always trading up, and I'll be doing my ChapmanWave methodology, because it's like tennis. I'm into tennis, and I'm out of tennis, and I'll be out of tennis for a while. Got to get the shoulder repaired. Pity. Just as I literally playing my very best tennis I've ever played in my life this summer. But pushing middle age, you get on, the body can't take it as much, and so I'll be out for a little while. Now, when I say the best tennis, I'm not talking about Wimbledon. I'm saying my best tennis. That doesn't make it good, but it's my best tennis. So, it's important to be practicing certain strokes, certain techniques over and over, so it becomes second nature, like a musical instrument. You don't sit there saying, "Oh, let's see." Oh, went to a really fun evening in the Mikado here at the Lyric Theatre last night. It was really good. Some things I was a little I wasn't disappointed, but I would have liked it to be a little bit different. But they have fabulous productions. And this one of the Mikado, Gilbert and Sullivan, had a lot of humor. It was really well done, and there was some wonderful acting. So anyway, what I wanted to say is, you want to keep your techniques up all the time. With a musical instrument, you don't sit there in the middle of the Stravinsky Right of String, which I saw the New York Philharmonic do last week live. You don't sit there saying, "Oh, let's see, C sharp, page 33, left hand, 3 fingers down, thumb, register key. Oh, and the little pinky finger comes down in the little key." I mean, you just know it. You know it in your ear. You know it by eye. That's what you want to do, and that's what I want. I want this to be about. I want you to be able to. I remember talking to it was the Investors Business Group, and then they changed the name to the Boston Investors Group over at MIT, maybe 2 years ago, and then again a year ago. And I would constantly walk in and I'd say, "Folks, if none of you are invested in the market because you're just so nervous," and I showed them the 1932 chart to 1937, how the market went. You think this is bad news with the media 24/7, every second of every minute of every day. Can you imagine what people felt in the 1930s? Just grab any New York Times and read the front page. It was depressing for years. And the market went up from 42 to 190 something. Fivefold. Can you believe it? We've had a run from the 6,500s in the Dow to 14,000 and then back down, and now we're at 13,390s. And if you read the paper, you would never have been invested on the long side. And this is what I said to the group. Don't keep looking down. Lift your head up. If there's a stock that you've been dying to buy at a certain price and it gets there, buy the darn thing and put a reasonable stop, and see what happens. And you'll probably be rewarded. So it's that discipline. That's what I'm hoping that I'm going to be able to achieve here. We do it all in different ways here at TFNN. Tom, Steve, Ken, Dave, Daryl, we've got Larry coming in. Whenever we're looking at these different characteristics of the market, each one has their own technique that they've just built into an instant response that they just see it. I love when I show my charts. I always think, I bet, like whenever there's a workshop that I go to, and I see someone who I know is doing the ChapmanWave methodology who's also there, I always say, "Hey, check out every one of those charts. You tell me which ones do not have at least a peak D before they make a top." And they're amazed. And I'm sure that our hosts, if they ever have a chance, they do watch my show, I'm sure they're looking and say, "Oh my God, there's a butterfly, there's a Gartney, there's a volume." It doesn't matter the techniques. And that's what I'm hoping that I can instill here. I love doing it. I've been a teacher since I was in high school, when I was the school athletic captain. In those days, well, back in the English system, the athletic captain was captain of all the sports, although sprinting was my thing, and I held the track records for a long time. In fact, some of my 100 yards and my 200 yards stood for years until they changed the meters and they took it off. And that was in 2 age groups lower than the senior age group, even though I was a senior in high school. I ran under 16 because I only turned 16 that year. So I used to love teaching. As a captain, I used to have to teach the art of relaxing when you're running. I used to be able to, I was so relaxed when I was running that I remember running once past the stadium it was the 220, and I was on the outside lane. And a friend of mine was waving a streamer for my house. He had different house colors, waving a streamer, and I just grabbed the streamer off it, and it was actually my record time. I mean, that's how you got to be relaxed. So in the market, you want to be relaxed. You don't want to say, oh my God. You want to put in your trade. You want to see what it is. You want to put your stop in or whatever it is, and that's it. For instance, in my opening call, my service that goes out to my subscribers from early in the morning, I start sending them out 8:35, 8:40, goes my Traders Corner, the final thing. With our picks, what we're doing, and every day I look at the stops, buy stops to see if we're going to raise them, what's been taken out, what we still have. We took fabulous profits in our home builder, and I think it was 25%, something like that, and about 20% in our ITB trade. And I'm looking to get back in at some point, maybe very soon. I don't know. But, that's the way you have to do it. And if I miss it on the way up, that's the way it is. I had a fantastic number of days where we were trying to get the GE, and I just kept missing it. And even yesterday, we just missed getting GE, and what happens? G spikes. All of a sudden, intraday, it goes from, I wanted it just under 22. It went to 22.11, I think, or 13. Pulled back. And then out of the blue was the report that things are going well and blah, 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 and shoots up 50-something cents. Okay, so we missed it. We've had a fantastic trade in G. I'm sure we'll get it again. Right now it's leg D in the daily, leg D in the month, in the weekly, and I'm not sure whether this is E or brand new B in the monthly, but it's positive. All the technicals in the daily and the weekly are positive. The weekly and the monthly. The daily is just starting to show a little sign of weakness right now. We'll see how it pulls back from this leg D, if it's going to. So let's go through the numbers. The Dow's down 92 at 13,003. Oh, I should also mention that it's a little unusual in that I have only short positions. I have mostly short positions, and we just started one long position today. It's a kind of a risky trade, but there was a doji candle right at a multi-month low. I thought the risk was so low that we were going to take it. If we lose 25 cents or something, or 30 cents, that's just the way it is. I could not resist it. But the volatility index, remember I talk about that? I had a question from one of my subscribers. I did not today get out my overview. I almost always give the overview. I came back a little late from the show last night, and I wanted to get out a bunch of things, and I got them out, and that was the one thing that was sacrificed. So I said I would talk. Would I talk about it? Yes, I will. So let's go through the numbers, and I'll do that. The comp index is down 18 at 31.17. Just as I'm thinking of things today, I want to go through it simultaneously. Apple is a big part of the Qs, obviously, a big percentage. When it gave a peak E-top the other day at 705.07. I don't have any round numbers yet, not on that day, but I had a round number the following day, a silent round number at 683. 683 is the number. If Apple takes it out and closes above it 2 out of 3 times, the trend remains positive. If it fails to do that, but instead it takes out the low of 656 round number that was made in the 12th, Apple goes even lower, peaked in the weekly. I'll be back, 877. We've got people waiting on the line, 877.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. Callers are piling up, so let me just quickly get to this. The question was, the first question from my email was, what about the overview? Well, the 120-minute chart shows that the arch, what I said to subscribers was that I don't have really much choice by going short when I get even short-term Ds or Es in the daily Dow or the S&P. It's just part of what I need to do, just as insurance. And the shorts that we have are based on other factors entirely. Two of them have been the absolute best stocks. It's a risk shorting within a point or so of their tops. Doesn't matter. That's just what we're doing. Seems to kind of be working out now, and then we'll see what happens. And the most important thing is I showed this oval. It's called a circle pattern, and it was between the 120-minute Dow and the 120-minute VIX. And what it showed was that the Dow was circling around. It did seem to target 13,239, the 200-period exponential moving average, number one. But the VIX made like a C1, C2 peak without really going into the 18s. It stopped at 17.08. on the 26th, and even the other day when the market was kind of showing shakiness, it didn't go above 16.93. And I've been talking about the volatility index as being the pressure, the buying pressure, and you can see that the buying pressure is still there. Whether it is alleviated because of the end of the month culminating here and we go into October, I don't know yet. So I cannot ignore the fact that this low volatility index, and that's why I haven't gone just broadly short everything. I've just been very selective, and that says that the buying pressure is still there. And the trend is at 1.50. It's showing a lot. It's actually showing that there should be more selling now than just a minus 86 on the Dow, minus 9 on the S&P. And gold is down. We'll talk about gold in a minute with our next caller. And copper is at 92.06. So let me just quickly do this, and I'll go to copper, and then we're going to go to our callers because, and there was an Apple. Apple, I think, is going to retest the 665 to 660 level. I think they've made a terrible mistake now. It's just going to say to people, you know what? We can hold off with Apple. We're not missing that much. We're just going to hold off. Especially for people like me who have Droid, and I actually would like to change and get Apple. I like the Google Maps. So if I don't have that, I'll wait. So gold. Well, actually, what we'll do is go to our first corner, and we're going to go to Ari in Arcadia. Hi, Ari. How are you?
Pretty good. How you doing, Basil?
I'm very well, thank you.
Yeah, I need a little help with the technical aspect of GLD.
Okay, so let me just take 1 second. I'm going to get out of this the Dow daily chart here, close the workspace. Why? Because I want to get the chart that you and I have discussed a number of times. I'd like to show it here. And that's the dollar, the UUP, and the GLD in perspective, just so that we can look without any technicals. That is, no technical tools like MACD or stochastics or anything like that. All it has are arch patterns, cup patterns, and trend lines. Now, your question is, where are we? Let me just give you a quick synopsis. In the UUP, when there's a cup formation that fails, especially a cup and handle, one of my least favorites. That's not to say that they don't work, and when they work, they're fantastic. They're the least favorite because, first of all, by the time you recognize them, they don't have that much further to go on the upside with the handle. Then when they break down, if they take out the bottom of the handle, then that's pretty sure that they're going to go at least midway into the cup. If they go more than midway into the cup, they almost always test the lows. Well, the UUP broke out, went to 23.14, couldn't get to 23.52. This is the Power Shares DB US dollar bull. And then what happened? It did exactly what, if anyone knows my CD introducing the ChapmanWave methodology, I discussed it, that cup formation is very important on how you come back into testing the cup. If you break down, you're going to test the low, and the low was between 22.06 and 21.74, and the low that we made 3 days ago was 3 weeks ago is 21.57. This is a rally back into the cup formation, and the GLD is making a peak B as we speak right now. I'm pretty sure it won't make a new high above 173.13 because it's trading at 171.85 right now. So that's purely on a visual basis, using the techniques of cups and arches and channel lines and horizontal lines. Not only that, the UUP failed to make in a left side, right side price time match to the week of the 10th of August a successful test of 23.52. It only went to 23.14, a peak F in the ChapmanWave, and then it failed. So that, I just want you to give that big perspective. Then I will get rid of that chart as soon as we come out of the break. I will show a couple of other things. I've got the triple yield bond chart in the background, but I will go to the technicals of the GLD and the UUP together when we get back. We'll be back with Ari and Travis.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. If you're a trader thirsty for knowledge, then we have the perfect event for you. Tom O'Brien will be hosting a live 4-hour dynamic trading strategies workshop on September 29th in the Tampa area. This one-of-a-kind workshop takes place from 8 a.m. till noon and is completely free. We'll even be giving away almost $2,000 in door prizes randomly drawn from those that attend live. Along with diagnostic trading expert Daryl Martin, Tom O'Brien will teach you how to identify and set up your trades using dynamic trading strategies, and Daryl Martin will teach you his diagnostic trading formula, including the strategy, system, and style that gives you an edge in this market. For more information and to reserve your spot today for the September 29th free Dynamic Trading Strategies Workshop in Tampa, please visit the front page of TFNN.com. Don't wait to act as space is limited. Sign up today.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and just to complete the story there, bonds are up 14.30 seconds at 149 and 30 seconds. TLT is a nice run. I'll talk about that in a short while. And crude oil is unchanged about 91.78. And we are going right to Ari, waiting patiently. Hi, Ari. How are you?
I'm well, Basil.
Good. So the GLD, there are a couple of things going on here in the GLD. There was a left side high of 174 back on 228.12. Let me just type that in. 220. I'm trying to migrate to the white background charts. I just, I still like the black because I just see it so quickly. I guess I'm very used to it. But anyway, I'm doing this because of requests. I don't know if I shouldn't say migrate. I'm still keeping the other up. So the GLD right now is at 171.88. Well, that left side high on the 28th of February came all the way down to a low of, I should have put that in, 148.60. So the 148.60, 148.53. No, wait a minute. Something's wrong here. 148.60 and 148.53 was a lower low. Okay, so that's the lower low. I didn't even see that. No, come on. 60, 148. Oh, so that doesn't change anything, but I need to move the arrow. Oh, that's what it is. That's what I did. Okay. So the start of the new move was on the 30th of May at 148.53. And it goes A, B minus, fails, comes and has a restart, A, B, C, D, starts again. It goes A, B, C, D, and the last D, peak D, the second buy mode, goes where? It goes straight to 173.18, a mere, 72 points below that 174 round number high. And so far, it's making a high-level consolidation, almost like an oval, but it could also be a cup and a handle formation. But there's a big difference. It has not gone above 174 yet. If it powers through 174, that could turn into a Chapman wave, cup and ladle formation, very bullish. That is, powers above and closes somewhere between 174.60 to 175.20 in that first big spike out of this large bowl formation. Now, bowl formations, we know from history, especially with gold. I don't have the chart. I do have the chart. It's right here. Give me 1 second. I'm going to show you something very interesting if I can find it. It was gold. It's the GLD. No, I used to have the chart, and then they changed the symbol. I hate when, like, Reuters takes over an index, and then all of a sudden the chart that I had going back 30 or 40 years is now starts fresh. So I don't know if I can find my gold. It's the XAU. I will find it, but there was a huge bowl formation that finally broke out in 2000. And it had been there for ages, just building slowly on the right curve to the upside. So if you're talking chart patterns, the chart pattern we're looking at now theoretically should be very strong. But it needs to break out pretty darn soon. I'm saying by next week, number one. Number two is, when we're looking at this chart, a couple of my indicators that I use are giving me not just sell signals, but the potential for a sell mode, but only if the GLD, I need price to be activated, and price needs to go under 168.34, the low of the 26. So your question is, what do I do? Is this the start of a really big move to the upside in the GLD? Or are we bumping into a very strong area of resistance? Isn't that that's the question I'd be asking? Is that your question?
Yes. Well, my other work I do indicates the gold will go down.
You see, let me deal with that right now, and I'm going to explain something that I'm looking at. I'm just changing the color because I want to show in color what can happen. I just want to see if it shows up nicely here on my cell phone where I'm looking at Tiger TV. There it is. It's coming up. It's in a little delay. Now I want to see the color, and I'm going to explain something. The pressure, I've kept it gray. I should probably make it red, but I'm going to keep it gray, kind of like a cloud. This cloud is going to be a pressure point if two things happen. One is if the dollar, the DXY, which is having an okay rally, but it's so pathetic in relation to where it was at 84.10 back on the dollar index back on the 24th of July and to the 78.60 low that it made on the 14th of September, that all I can call is that this is a hiccup going very quickly to peak A, peak B, peak C, and this leg, maybe even by the end of the day, could even get to D, which says the quicker you get to D, the quicker you can have a pullback. It doesn't say a major sell. It says a pullback before going higher. So on a short-term basis, I have to put the whole picture together. I have to show you the euro. Now, we had a discussion the other day. We had a caller who called in, and I said, I'm using a phantom. I've got every legitimate reason within the Chapman wave to use a phantom peak right on the low that made a high on the 28th of August in the euro-dollar currency pair. And because I did that, I identified perfectly the top that was made with a doji candle, plus it used the Chapman wave techniques that I love to teach about what happens after a doji candle. And you got the high of 1.3176 on the 17th, and now we've pulled back under the 9-period exponential moving average, and the MACD and stochastic are turning down. So I suspect that gold is going to have a lot of trouble breaking out right here, but I have to call it as a short-term look, because if I look at the gold contract, the December contract, it made a cup and ladle. This is exactly what I'm talking about. It made a cup and ladle breakout because it never took out the 1678.60 high of the 1st of May until it powered through on the 31st of August. That gave the ChapmanWave cup and ladle, goes to peak E, and now it's consolidating. Theoretically, it shouldn't even have this counter trend rally. The GCZ should be under 1738.30. So because of it, there's a question in the den if I could repost the euro. I'll do that right now. You see that the MACD and stochastic in the euro, in the gold, the euro, and the E-minis that I was showing earlier on are starting to pull back. I'm sorry, and the Dow chart that I was looking at earlier on are starting to pull back technically, but the price hasn't really given back much. So I have to say there's residual energy. There's the same left side, right side price time match that we're looking at now to the high of 29th of February at 1800.90 in the gold contract. If by Tuesday afternoon, Wednesday morning, it takes it out, the dollar is going back down again, and the euro is going to have a counter-trend rally. So now the only way I can answer you, because you are looking as to what position would be the correct position to put on. Well, there for MMS in the den, here's your chart of the euro. For my way of thinking right now, are you in any GLD position? I know you got the SLV, but are you in the GLD?
Not at this time.
Okay. So what would happen if GLD closed above 174? You'd miss just a fraction over 2 points, 2.10. I don't think that's a big deal, because if it closes above 174, we're looking at it raising the base. We're looking at the dollar pulling back. We're looking at the euro possibly testing the previous high that was made recently, and the general stock market, because they have been going together and are making a big deal that the VIX is still very low. I've got to be very careful on the short side, because there's pressure. There's buying pressure. It could just be it could just be fund managers end of the month buying. I don't know. But I've got one leg on the accelerator, and I've got my foot above the brake, ready to switch positions if I have to. Well, the stops will tell me, or the buy stops will tell me. But you can see that to jump into the GLD now says that that's okay. You could buy a little position at 171.89. Why? Because your stop needs to be 168.34. So if it's a small position, having a 3-point stop on $172 stock, it's really not a big it's a small position. It's a 2% risk, I think. 2% risk. So that's one way to do it, to be in the GLD. Now, something else is happening in the foreign markets. So I don't want to put that picture together yet until I get it closed today at 5 o'clock. Then this weekend, I hope I have time. I probably will, to do work on the monthly charts. But you see that on the monthly chart, so far the GLD says this is very good action, but it's not verified yet by the technicals. But price is the arbiter of trend, and the price is moving higher. But until it really takes out the high of 174 and the GLD on a monthly basis, I have to say we're coming into a very strong area of resistance. The weekly chart looks as if it doesn't do it today, it's going to make leg D next week above 173.18. That's the way it looks. So I'm going to make a recommendation. And think about it. You don't have to jump into it. You don't even have to do it today. But because of your longer-term perspectives, I'm going to suggest that you consider, it doesn't have to be today, because I don't think you're going to get such a big move in the GLD between now and Monday morning. But you might want to consider at least tiptoeing, even though it's almost at the high, into the GLD, just to have a position. And the reason why, it's shown that it's been the risk trade in this particular time frame, that there is money going into gold, the GLD particularly, and silver, and it seems to be coming as if it was, you know how I've spoken about gold being another currency, a currency of fear, and it seems to be there. Now, how you can have a currency of fear moving up with a stock market less than, 8% or 10% away from all-time highs in the Dow and the S&P, but the S&P's a little more. This is very unusual, and it could be Fed pumping money. So do you understand my philosophy here?
Yeah.
Is that I don't want to fight a trend, and I don't want to fight the thinking behind it, but we will never really know the thinking. So I'm thinking about the thinking. Well, you're going to say what?
Yeah, gold is not being viewed as a currency of wealth. I mean, I'm serious. If you listen to all the hedge managers, they're talking about gold as the currency of wealth now. They're not even talking it as the money.
I understand, but I think that's American. I think the Europeans and almost all foreigners understand that historically. I've a father-in-law who survived during the war by having gold in the heel of his shoe, gold nuggets in the heel of his shoe. So that's the mentality. So gold in that part of it, I think, is part of what's driving it, but I don't really know. I'm just speculating. Looking at the price, I'm going to do this. I'm going to show you very clearly. I'll show you this, and then there are two things that you can do, and the price is going to tell you why. Because if the GLD, did I get that? Oh God, let me go back here. Yeah, if the GLD breaks underneath the low of 3 days ago, then it's in a consolidation, a high-level consolidation. And if it breaks above the high of 5 days ago, above 173.18, I think it's going to break 174. So the risk is that you've got a minor pullback. I call it a minor pullback at this particular point. But the risk also is that if it suddenly breaks out above 174, there's a chance you might have to scurry to buy it. So that's why I'm saying, think about maybe starting a small position. I know that how you're capable of handling those, but just a tiny position to have your foot in the door, even though you know it could be right at a top where you might even have gone to the short side. And all I'm saying here is monthly and weekly are very good. I don't want to fight that trend right now. But I'm looking at this throughout the day and the evening. I keep looking at these charts and saying, don't fight the trend. You're going towards testing the top of this range. Wait for evidence to say that it's breaking down. The evidence for me is that the MACD and stochastic are pulling back, but the price is holding. So I hope that helps you, Ari.
And the monthly, would you count it as a B wave or an A wave?
On the monthly, it's still a peak F, and until it breaks above 174, it is still a counter trend gray A going to the second A. And as soon as it passes that, even if it doesn't close above 174, if it goes to 174.01, that's gray leg B. Gray meaning it's still under the major peak F top. Okay. Have a great weekend, Ari. Thank you. Great call.
Thank you.
Thank you. Let's go to Travis in St. Louis. Hi, Travis. How are you? Oops. Oh, Travis just dropped. Travis wanted to look at ISRG. I wouldn't be surprised if he's still listening, but I have to go to the black charts. No problem. Black chart, here we come. ISRG. ISRG is, in fact, the Intuitive Surgical, Da Vinci Surgical Equipment maker, made a peak D top at 591, Now, the question is, you see, this is the same as that peak F top that we saw in the gold index. Is this a top of consequence when it's going sideways, having held the low of 467.26? I think that's the question. In the meantime, I I believe Travis had emailed me during the week and asked me about his trade. He had shorted ISRG, and I said to him, I think that's a great trade. I think it's going lower. Just put your stop at 502, which is the 9-period moving average. We'll be right back. I hope he calls back. Travis, if you can, call back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, Then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question, are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this. Today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians. Remember, next week I start 5 days a week, Monday, Tuesday, Wednesday, Thursday, Friday. 11 o'clock till 12. I haven't quite got everything in my schedule organized, so there'll be times that I'll have to miss, but that's what I'm planning. Now, as an advocate of the ChapmanWave, let me show you ISI RG, Intuitive Surgical, down 8 at 491.55. If you go back to the low of May of 2001, it came from a low of 6, had an incredible single leg A up spike, and then failed. Aha! Let me just do this. This morning I heard, what did I hear? First of all, I'm going to do this. As I'm doing this, I'm going to show you different charts because of the techniques that I'm talking about. There's a single leg spike right now occurring in corn, the December corn in the 120-minute chart. This is a single leg A. Why is it a single leg A? Because the low was made in the bar at 6 o'clock on the 28th. That's this morning. And we've had some subsequent bars to call this leg A. If the single bar up, I couldn't put that A on it until I get more a second bar to the right from the low bar. So that makes this a leg A. It stops where? Right at the 200-period moving average of 758 and 3/8. Aha. Now, here's the other thing. That's the 120-minute chart. The 10-minute charts make an A, B, C, D, E. I'm calling this leg F on the upside /B. But F is the preference because it's MACD and it's turning around. Stochastic still really good. I've never seen 100%. I don't know if I probably have, but I just don't remember it. 100% stochastic, it only goes to 100%. That's a full house. So that's very positive. So it's an F/B, and until it breaks under 756 and 2/8, I'm going to have to call this F/B. But if it does break under it, I will call it peak B. So that's how it works. Now, you remember, I was just talking about the chart pattern. This is the 10-minute and the 120-minute chart. I think I also did. I just want to see if I can do that. No. Yeah, and gold, the 120-minute chart made a peak D. That's the December chart. So I'm going to be showing you these techniques as we move along. And let me just go back to ISRG. So what happened is it constantly made peak A, B, C, D, E. It went to an F at, that's the wrong chart. ISRG. I'm going to just go through that. Then I'm going to talk about the week ahead. I'll have a minute to do it. That's fine. But in the last move from the most lowest low, the doji low at 84.86 in March of 2009, it went peak A minus because it pulled back, started a brand new ABC, goes to a peak D at 594.89. The next bar in May is 591.64, just 3 points lower. You remember that's the technique that I've been working on for a long time, a monthly fractionally lower high bar. So you've got a peak D closing now underneath the 495 9-period exponential moving average. If that is the close today at 4 o'clock, be careful, because if it takes out 467 in the next 3, 4, 5 days, that's the dreaded H pattern of the weekday that goes to an M formation. All these are techniques in the Chapman wave, as well as the large H in the weekly, in the daily. It says be careful because the next level of support will be down to 429 level if it takes out 467 decisively in the next week or two. That's ISRG. Upside right now looks very limited. It's 502 to 507. So now let's go to the market. Talking about the Dow in this particular instance, the Dow is underneath what was a channel support, then a resistance line, and then it became a resistance again. If the Dow closes today very nicely, closes like minus 35 to even a plus 15, I say, hey, that's pretty good action based on that volatility index being low. But if the Dow closes at the low of the day towards the 13,380 level, I'd say, okay, we are now, a short-term sell signal has gone to a sell mode, and you can expect next week to be weak. Thanks for being here. Stay tuned for Nico Dohan. I'll be back Monday.